I have a question for Dr. Jamal. I ran across, I think that's the paper that was published in Emerald Insight. But when you're talking about the multi-criteria decision model, the in-sample prediction was different from the out-of-sample prediction. And if I want to move it to practice and finance, I would like to predict the bad, not the good. But your model's ability to predict the good was better than your model's ability to predict the bad. And my question is that how sensitive is the model's predictive ability to the definition of bankruptcy? Because in Britain, many companies, they file for bankruptcy to avoid headaches and follow up with the banks. Where if I want to take this model and apply it on my internal data, the bankruptcy would be a non-performing model. So how practical is that?
Sample versus out of sample performance, that's just a normal thing. Although it looks like it's underperforming in some cases in predicting the bad cases, it remains that it's really marginal. It's a tiny fraction. So in the whole sample is actually only one firm that has been misclassified. So it's actually not bad at all. Now, how sensitive is the performance of the model to the definition of bankruptcy? That's a very good question. I'm afraid I don't have an answer to it. I know that there are papers that have looked at the performance of different models with different definitions of bankruptcy. I haven't done that. So the answer is I don't know.
Well, I mean, other questions?
I have a question.
Oh,
Am I allowed to?
Yeah, go ahead. Take your time.
Okay. For the two Michaels, two different questions for the two Michels. The first is for the Turkey use case you were presenting before. Being a strong believer of credit bureaus, as CRIF, I'm biased, of course, because of my origins. But you mentioned the case of Turkey and the combination of internal and external data. And we were talking over dinner last night. Did you also measure the benefit that the introduction of external data, credit bureau, KKB, brought to your predictive power models? And this is, sorry, the second question is about crypto blockchain. Can you make a very simple example of the benefit that then, in the financial services arena, an example of how the end consumer, myself, can benefit from the introduction of blockchain? So I'm thinking about payments. So I use regularly my credit cards, I pay online, whatsoever. So will I spot the difference after the introduction of blockchain?
Go ahead.
I want to ask Mr. Michel Kamel, how is the new regulation, the GDPR regulation, how does it cause challenges for machine learning? Like with the new GDPR regulation, we are protecting personal data, we are collecting the consent of the data subjects to process their data. So this maybe causes some challenges and blocks kind of our ability to use the personal data of data subjects. How does it cause challenges for you as a bank?
Actually, I'm not the expert of GDPR and how it's impacting the data with different departments and different activities across the bank. But what can I answer is that all models currently are used by internal data to serve an internal activity. So the input and the output of the model are internal to the bank, and
No data is going outside the bank. So from a banking secrecy, at least I can say that it's fine with the machine learning. There's no problem. For GDPR, as far as I know, this will not impact.
Excuse me, allow me to give a compliment on the question about GDPR. Because we've been putting GDPR into compliance in several banks and financial institutions in Europe. The question of machine learning or GDPR, what asks you to do is the following. To give access to all personal data to the owner of the data first. To tell him what you are processing with the data, even internally, what's the finality, and to ask him consent to do this, even if it's internal. Now, it does not apply for people who are not European citizens, not just nationals, just any citizen resident there. But if you are processing data for any European citizen, you should comply. Or you can face, which is a risk you need to take or no, of paying 4% of turnover, 20 million euros in penalties, whichever is highest. Now, the best way to comply with this is to ask consent, to inform, and to get an opt-in or an opt-out approach. You need a legal consultancy here. And most of the bank are putting this part, this internal part, into the contract of the client. So you tell the client that you play with his data, you use his data to optimize your internal services without giving access to an external party, but you tell the finality, and you need to declare the processing. Thank you.
May I follow up on what you said? It's not my question, but
sure.
Does anybody have the choice? I mean, when you display this GDPR data, what choice do we have? Is this really controlled? Is the privacy policy controlled by any government to make sure that the data is not used like the Cambridge Analytica case? What is the real protection in GDPR?
The supervisory authority, actually there are supervisory authorities on GDPR compliance. For example, in France, it's the CNIL, but you can choose another supervisory authority. They will go and they will audit. They are planning inspections on banks, on financial institutions per market, for they say we will start with insurers, then we will go to a social Facebooks and stuff like that, and then banks. And when they go and inspect, they can arrive at 6 a.m. in the morning as a security guy to open the gates and to enter the data center and plug and export data. They have this power, this legal power to do this. Now, so what you need to do what are your choices, is to get ready, to be prepared for such inspections, get the procedures in place. But the most important thing to do is to have a proof ledger, a proof of compliance ledger. And excuse me if we're jumping back to the blockchain topic again. Blockchain is proposing with certain, as a service solution with certain fintechs, a ledger for compliance just for the GDPR. There are companies who have specialization in providing solutions for GDPR compliance. This means the ledger of consent that will integrate with all the system to tell the system that you grant consent, you take out consent, and you can put it also with your providers, because the bank has many actors behind its supply chain.
Now my question is to you also. You presented a way to transfer money in a quicker way using cryptocurrency, but do you mean by this that if I want to transfer dollars, it is converted into Bitcoin, transferred as a Bitcoin and reconverted into dollars on the other way? Otherwise, it doesn't make too much sense, or I didn't understand what you...
No, sure. This is an excellent question for two reasons. Because there's the short-term approach and maybe a visionary long approach. The short-term approach that's happening today is the following. There are three models, one of Ripple, one of Wirex, and just allow me to illustrate them very quickly. Ripple allow banks to do cross-border payments between each other using the Ripple cryptocurrency. And it's just a convention between those banks. It's like I'm telling you that I'm inventing a token and you're accepting it as engaging for you. You owe me money if I give you the token. So yes, it is using cryptocurrency without converting it to any euro or to any dollar here. It's just a convention between banks. The other way of doing this is Wirex. Wirex allow merchants to accept Bitcoin or Ethereum or cryptocurrencies, but the merchant will not receive Bitcoin. He doesn't care about using Bitcoin. He don't want to. The treasury guy is very scary. So whenever you pay in Bitcoin, it's immediately sold on a marketplace by this company called Wirex, and they will transfer for you euros instead. Now, you can pay using your credit card today with Bitcoins, because you can buy Bitcoin. Anyway, there are even cards now that allow you to store Bitcoins inside the card. Now, this is just a short-term approach. the mid-term approach. The long-term approach is why and how can blockchain or cryptocurrency improve the user experience in any way? Because you can do it without cryptocurrencies. And he's right, the best payment is the payment you do not see. So Amazon have tried this instant checkout. When you enter to the store, take your stuff and go out. But still in this process, you are going to the 15 steps that I showed earlier. Because Amazon will implement the one-click maybe payment, plus facial recognition, stuff like that. And it will go to the old process, 17 days, 7 days, 1 to 7 days to give you the cash. Now, the banking sector is trying to improve this with instant payments. So you can pay and 7 seconds later you receive the cash. But look at the effort that the banking sector is putting to implement instant payment that will only work in Europe or only in UK versus the blockchain model that is not completely ideal today, that is instantaneous worldwide.
Are there more questions? Yes, you can.
I think when you talk about the banking system accepting cryptocurrency or digital currency, first they have to produce digital money. The experience of the Sweden Central Bank with the distributed ledger technology was a total failure. Yeah. And that's a form of blockchain application. And I don't know if we have gotten to that point or even coming close to it. And when we talk about cryptocurrency or bitcoins, this is an asset. It's a digital asset. It's not a currency, it's not money, because it doesn't fit any of the functionality of money that we know of. And it's volatile in this price and what have you. And in finance, we don't use that you transfer Bitcoin. You actually don't, because what happens is that you are selling a digital asset, and at the end, to go into the banking system, it has to be transformed into an acceptable form of money. And so far, the experience of central banks with distributed ledger technology has been a total failure. Actually risky to the point of being total failure.
Yep. Thank you very much for this very deep question. The examples that you are mentioning in Switzerland or even in Canada Central Bank or France Central Bank and in Europe, yeah, there are somewhat a failure because all of them are, first of all, just testing and learning, and they are attacking the problem from the most difficult part. They're starting from the end. They're trying to create a consortium between each other and trying to make things work where there's no foundation. The other problem with this approach is that they are attacking the problem by projecting what we know today in the banking system and payment system and regulation today on a blockchain. This is not a blockchain problem. This is the real world problem. This is today's old-fashioned way problem. Now, allow me to comment about the currency and what's money. I'm not the one who will define money. Yeah? Sure. No.
Digital currency, it's being misrepresented.
Yeah.
Yeah,
about this point. So what are the functions that we expect from a currency? It's a store of value. Well, Bitcoin by definition can be a store of value.
Very volatile.
Oh, wait about volatility. So it's a store of value. It is also a means of exchange, and it's a measure of things. So these three functions can be provided by a cryptocurrency. I'm not talking about Bitcoin. Actually, maybe it's a risky thing to talk about Bitcoin. I'm just talking about the idea of a cryptocurrency. So it's a digital currency that is secured by cryptography.
I think this is the end of the questions. I want to thank Professor Osman and the Olayan School of Business for organizing this excellent conference, for the breadth and depth of topics that have been discussed. I want to thank the lecturers who gave us really excellent lectures, and I want to thank the audience for bearing with us for 2 hours. Thank you very much.
Just before you leave, I would like to have two things. First, a token of appreciation to the Central Bank. So I'll give them a shell. As well, appreciation to our speaker and appreciation to you to have a photo with our expert. Just bear with us because we have time. And the time for today, we have, after this, we'll rejoin at 1 o'clock. During this period, we allowed more time for people who want to pray, for people who have lunch, and we rejoin at 1 o'clock in the fourth floor, where we'll have academic session in 2 separate rooms. So this will be over for today. And please, there's one thing I'd like you to plan ahead of it, is simply the following. Please, if you are interested in the movement of analytics, we want to create people who believe in it, promote it, and for which tomorrow we'll have a prizes for those who are joining, surprises to be announced as the closing session. Thank you very much. For the time being, please allow me to start the process of appreciation.